when you're jumping in something, you have to be a little bit scared. And this is where you learn, because when you're doing just the stuff that you know, at the end, you're just being lazy, and this is where you're making mistakes.
Have you been thinking about buying your first rental property for some time, or do you already own a bunch of properties? Well, fellow investors, you found the right location to listen and learn from others' successes. Welcome to The Very Real Estate Effect with your host, Axel Mont-Saint-Jean.
Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in Quebec. And today it's in Quebec, it's in Montreal, and it's a pleasure and an honor, again, yes, like last week, to have my friend Denis Gallico who's here. Hi, Denis, welcome to the show.
Thank you for the invitation, Axel.
It's a pleasure. Look, if you didn't listen to last week's episode, you definitely want to start there. And today's going to be a continuation of this conversation, and we're going to be talking a little bit more about the evolution of Denis' real estate investment career and how he scaled up. And so to understand that part, really go listen to last week as well. And just at a bit of as a recap, Denis started with some smaller plexes in the Sud-Ouest, in Verdun to be specific, and other places in Montreal, and a triplex, a sixplex, a nineplex, and then building in the back on the vacant land. And then he reached a point where he identified that he had certain strength and then certain weaknesses, and it was time to partner up with people that could complement his skill set. Is that a good recap?
That's perfect.
Yay! All right. So then for today's episode, the idea is to talk a lot more about your evolution.
Yep.
And then, then you started to go into partnerships. And first of all, what did that look like? And I know it's a big, broad question, but at what point, and this is where we're going to start, at what point did you identify that you just didn't want to do this alone anymore?
As I was saying last week, is my strength were really into the acquisition process, right?
Yeah.
So I don't want to partner with people that are average in everything, right? You don't want to be like 2 or 3 partners that have the same strength and maybe are average into accounting and to this and this and this. I want to have experts surrounding me, right?
Mm-hmm.
So when you're hiring the lawyer, you want the best one, right? You don't want the average one.
Yeah.
So this is what I did. I said, I'm going to be the expert into the acquisition, and I want to have an expert into the construction. I want to have an expert into raising capital and dealing with tenants for the management side.
Mm-hmm.
And I want to have an expert into the structure, the processes, and the accounting, the building a company. So this is how I build my partnership.
Mm-hmm.
And so this is where Jordan, which is raising the capital, is a financial planner.
Okay.
So he is not begging for money as I felt early on. Now it's good. But
and now he must have access to a lot of capital for your deals.
Yes.
Yeah.
And because people are usually, in their clients, not a lot of people are making like 10, 15% interest on their money. So sometimes it's just stuck in the bank at 5%, and being able to give them the opportunity to invest into real estate without the risk, it was a good thing too. And Kevin, which is the GC, so the entrepreneur, big experience, his father was an architect and an entrepreneur, so
Wow.
he built all that experience during that process.
Mm-hmm.
And Donovan was a fireman. Is still a fireman, but a fireman, so he has a lot of extra time.
It's always the joke. When are these guys working anyways?
They all have a second job.
Yeah, they all have a side
inspectors
gig.
and anyway.
Yeah.
No, that's funny. He's really meticulous, and he knows a lot of processes, so he can really build a company. When you have a lot of experts, you need someone that is building a great foundation.
Yeah.
With processes, with all that, and that was the guy.
Okay, so you guys are kind of like the village people. So I imagine the guy with the hard hat, the contractor,
Yeah.
the guy who raises the capital,
Yes.
and then you doing the acquisition.
Yeah.
And you said the fourth was he's the
Donovan.
art.
It was
the
really like
architect?
the entrepreneur. No, it really not the entrepreneur. The processes guy.
Okay.
The guy that can put the glue between all the
Okay, the
departments.
project management.
The
part.
project management,
Okay.
like is gonna put, let's say, CRM
Yeah.
is gonna deal with all the cash flow, all the bank accounts, all the lawyers stuff, the branding.
Yeah, the setup and the structure.
Yes,
Okay.
exactly, and you need that because you don't need just individuals into a relay.
No, exactly. And as you said, like you have to partner up with people who have a complementary skill set
Yes.
instead of the same one as you. Otherwise, you're just wasting people's time. Okay, so how did you meet those partners?
So I met those partners at Collège Amorex during the incubator program, which was La Meute.
Yeah.
So it's a 6 months program where you're spending, let's say, 4 weekends together into a 5-star hotel to just learn stuff and be together. And so it was very nice. And in between that, you have a lot of stuff. So anyway, it was. This is how I met them, and it was very nice.
Okay, so then at the end of the 6 months, you're like, hey guys, we did a mock-up project, but now how about we go out and do a real one? And let's build a company together. So then how did it, what was the first deal like in that structure?
So this is, so we did a proof of concept. This is how I like to deal with partnerships.
Yeah.
A lot of people are trying, like, it's like your wife, or your wife or your girlfriend. You don't want to propose the first night, right?
No, it's bad. No.
So in a partnership, a lot of people are saying, okay, we're going to do this and we're going to spend the time together for 10 years and we're going to do that.
Whoa.
So what I usually say is, first of all, have a good convention of partnership. State really like what you're doing into the partnership. So I'm doing this. I'm accountable for this. You're accountable for that. You're accountable for that. And start with a proof of concept.
Yeah.
One building. So not 50 units, maybe a 9-plex. And this is always we started. We'll do it in a year. We'll see if we like to work together. If we I don't know, like we see. Maybe the synergy won't be here, and at the end of the year we'll be okay. That's good. We did one project together and it didn't work out. So just start with, let's say, one project. So this is what we did. We did a 9-plex in the village.
Okay.
And big construction. So everybody was doing stuff in it.
Yeah.
And this is how we learned, or everything we have to bring to the table.
Mm-hmm. And as you said, like a lot of people have big expectations and, hey, do a 10-year timeline. It's like, no. Let's start with one project.
Yeah.
Let's get our feet wet. Let's see how it works. Let's see if we can actually do what we said we're going to do, the proof of concept, and then and then go from there. So a 9-plex in the village, and then after that was rinse and repeat.
So after that, we said, okay, we did 1 year. This is what we have to improve into the partnership, into the skill set. And in terms of responsibilities also. So then we're like, okay, we'll give a 2 years time frame to, let's say, start to build processes, because the first project is just sharing the work. And okay, we'll do a company and we'll build processes and we'll do that. And we'll be able maybe to buy more than one building a year. So the next year we bought, I think, 2 6-plex plus 1 8-plex plus commercial. So this is what we did. So it's not about the downgrade. It's just about the project that we're interested in at that time. And this is how, and also the reality of every partners, like that's funny, but because fast forward is when we started, nobody had kids. And now we have, I think in the partnership, we have 5 and almost 6 kids. So, priorities can change.
Yeah.
And this is why every year you have to look at your partners and say, do you still want it? Is it still your priority? I want it. Let's say one can be, okay, I still want to have 1,000 units. And the other one was like, maybe I'll say, no, that's not our case. But the other one would be, oh, look, I have 2 kids now. I really want to spend time with my family.
Yeah.
So you have to
want
make
to slow
sure
down a little bit,
Yes.
and we adapt.
So you have to really look at each other's eyes every year and say, is it still what you want? Yeah. So the proof of concept we did. After that, we had a 2 to 3 years period where we wanted to build a business. And after that, we just entered and the let's say the 5 years. So I'm doing 1, 3, 5.
Yeah.
And the 5 years process is okay. Now, if we stuck together for 5 years, what can we do?
Yeah.
At the beginning when you're doing a 1 year, you're not aiming the same stuff and you're not building the same company when you have a 1 year time frame. But when you have a 5 years, okay, now we can look at bigger assets. We can look at different stuff.
No, definitely. And this is where in the partnership, each person comes with his own experiences, his own skill sets, and we have to be very proactive in making sure that we're all aligned, because it's easy to but I thought we were going to do this and I thought we were going to do that. And as you said, at least once a year, all take time and look at each other in the eyes and say, is that what we still want? Does someone want out? Are we still aligned on the priorities? And so on and so forth, because it's always great and dandy at the very beginning when we have big dreams and we're ambitious, but when shit hits the fan and the financing doesn't work and the city's after us and une mise en demeure arrives, then all of a sudden it's not as fun. Yeah. And that's when we really test the strength of the partnership.
Exactly. So this is what we did.
Okay, so then now you've been able to work on much larger projects. And at the MREX event that I attended a few months ago, you had shared a fun story about working with an owner who's got a building on St. Catherine.
Yes.
You finally closed. Congratulations.
Thank you so much.
After about a year and a half of back and forth and negotiation.
Exactly, yes.
And this was done with Imo Alliance, and that's probably a project that you wouldn't have been able to do on your own.
No.
And so can you kind of share this whole 1 year and a half in a few minutes?
Yes. So in 2022, as I said, we bought a larger piece of real estate, but the same thing as the garage I converted, but in bigger space. So it was 10,000 square feet of vacant commercial and 8 units on top.
Okay.
And we converted the 10,000 square feet to have 3,000 square feet for us, for our offices, and 7,000 square feet to do 10 units. So we ended up with 18 units residential. Beautiful. And our offices that are brand new. We bought that with a broker that is really connected into the commercial space. And the guy looked at the thing from A to Z and it was like, I cannot believe you did that with that building.
That's such a good project.
That's such a good project and it's incredible. Yeah. So I know the wife's owner and he has a building on St. Catherine. And I was like, oh, wow, okay, that's big.
That's a whole other scale.
We were buying, let's say, $2 to $5 million projects. Yeah. And this one was listed at 20 million. So it's a big step. It's on St. Catherine. It's 6 stories. So
it's very intimidating.
It's intimidating.
Yeah.
To
say the least.
To say the least. But as the first episode when we were speaking about the stuff that I didn't know much, I like to be surrounded by people that knows more than me. And I said, okay, let's try that out. I mean, worst come to worst is like what, 15, 20K in due deal that you're spending and you're not recovering. Yeah. But what's the price of knowledge, right? So at the end is we started and I think we made an offer at 15 million, something like that.
Okay.
And we went through the due diligence process. And at the end of the due diligence process, the permits at the city, it was long. It was a 6 months, 7 month period.
So, because hold on, during the due diligence, you already asked to convert some of the office space to residential.
Exactly. Okay. So 4 stories of commercial space that was almost vacant to residential.
And what was the city's reaction?
The city was fine with that. It's just like the process is too heavy that it cannot be in a week, No. So anyway, we did that, but the city was saying maybe 6 months, 7 months to get the permits. The CMB, for the knows that doesn't, the interest rate are based on the CMB, Canadian mortgage bond. Was rising up, I think, from 3.5 to 4.5. Yeah. So just to understand, like 0.5% was almost $1 million to $1.5 million lost at the refinancing. Yeah. So raising 1% was $3 million in difference into your spreadsheet. So
which makes a big difference.
Which makes a difference.
Yeah.
So I just said to the owner, I mean, you have to be transparent and you have to keep the great relation with the owner because you never know. And I said, look, I don't want to hold the purchase offer for a year
Yeah.
and block you of having maybe someone else buying it. And
Yeah.
I want to be fair play and say, look, those are the reasons. I'm still interested, but I'm going to continue my due deal, but I'm going to let you the chance to have another buyer.
Yeah.
So this is how we exited the purchase offer. And during summer and fall, I think they had 1 or 2 or 3 offers between 12 and 13 million. And it wasn't going through. And in December, I said, look, I did a due deal. I know pretty much what I can do, but I can do it at 11.5 million.
Yeah.
And without any conditions. So I'm going to write you an offer with no conditions. Just saying I'm going to close in 3 months.
Yeah.
So what's the price of peace of mind? They were not agreeing in partnership, in a partnership. So it was really hard for them because it was the first building they were selling for the years. So they were just an argument between partners. So the peace of mind is worth maybe $1 million. So anyway, this is how we had our offer accepted. Yeah.
Okay. And as you said, like just to backtrack a little bit, you worked on the deal for months. You did the whole due diligence. You know that building and that project inside out.
Yeah.
And then it's too bad because a lot of people go through this. I've gone through this where at the end you still have to back out and you're like, man, I've worked on this for 6 months.
Yeah.
It's hard. It's hard. But if it doesn't make sense financially, don't do the projects.
Nope.
I mean, you're in this to make money in the end. And I can just imagine, you know, kind of the disappointment, but at the same time, it's the right thing to do. And the amount of credibility that you actually built with the seller in saying, look, man, I don't want to tie you up. You have other possibilities on the market. Explore that. And then if, you know, we come back. But I don't know. So
because a lot of people in the land business are doing that. They are tying up
forever
the deal for 2, 3, 4, 5 years. Yeah. And this is not the name I wanted to have in the industry.
So then you came back and then at a price that made sense for you, given the sharp increase in interest rates and the CMB, because that's that corresponds to the financing you're going to be able to get. Yeah. So less financing, lower price, and then so finally you did it, and then you rewrote an offer. I'll close in 3 months.
Yes, this is what we did. I mean, the first offer, I said, okay, it's going to be 11.5 or 11.6 with a balance of sale. But I knew that they had an agreement between partners. So when I presented that offer, I knew that he didn't want that. So I said,
that was on purpose. It was a way out?
That was on purpose. It was on purpose. So I said 11.6, but you have a balance of sale of 500. And he came back and said, we cannot do the balance of sale.
Nah.
Look, the price of the balance of sale is going to cost me money to raise the capital and this and the interest rates and this. So it's going to be 11.150.
Okay.
So so they agreed on that. So because they wanted 12 at the beginning, so being at 11.6 or 11.7, they were close.
Yeah.
So they can swallow that pill, and at the end, anyway. So that
good negotiation strategy. So then you had 3 months to close, and then can you describe? Look, so how did you finance an acquisition like that? Because you said it's pretty much vacant.
Yeah.
And it's not like, okay, we'll all chip in $100K here.
No.
This is serious money.
So as I was saying, is the first episode. B lenders are really needy in terms of those kind of projects of redevelopment.
Yeah.
So you have B lenders that start at 10 million financing. So we financed it with Timber Creek.
Yeah.
Timber Creek was a B lender that's starting at 10 million, and I think they finance us 85% of the acquisition and 100% of the construction cost. So that was a pretty good thing at a great interest rate.
So you just need to bring in about 2 million or something like that?
It's different. Like it's not because you're financed 100% on the construction that you don't need money for the cash flow.
No, of course.
Because you have, usually I think it's $750,000 per expenses covered. I mean, I don't remember how you say that in English, but anyway, so you always need $1 million in the bank just to advance the expenses before the bank is reimbursed.
Avant les débourser.
Yeah, exactly. So, we needed 3.5 million for the acquisition and about $1 million for the construction.
Yeah.
So
and then you were able to raise that capital from partners. You gave them an equity stake, or did you just give them a return?
That's a good question. And what we usually do is, if you're taking the risk from the beginning, you will have the equity. So the 3.5 million is giving you the equity. So what does it mean is you will get back your money after 2 years or whatever, and you will keep the shares into that building. If you don't want to have the risk and you just need the interest, usually is where we finance the cash flow for the construction. So the $1 million, it's usually a 6-month or 9-month period.
Okay.
So it's not from the beginning. It's not the 2 years process where you're sharing the risk. It's just like a 6 to 9 month, and this is where we are giving the interest.
Okay.
Yeah.
And so this you finally closed a couple months ago.
Yeah, in June.
I understand there was also an issue where you had an investor that backed out at the last minute.
2 weeks before. I mean, we had the 3 month notice, and 2 weeks before, our primary investor that was putting 2.5 out of 3.5 just said, look, the money, and it was a previous investor that already invested with us, so it's not someone that was brand new.
Yeah.
He said, look, the money is stuck in France, so I cannot move it to Canada. It's a nightmare. So it was 2 weeks before specifically the date in end of March for notary, and I was like, wow, okay. So I cried for a minute, and after that, what I usually say is, you're either in a strategy mode or tragedy mode, and it's either you're like, how it's possible that it's happening to me, and or you just look at the facts and you're like, okay, how can I find a way?
Exactly. Quick. How do I turn this around?
Exactly. So
how did you turn this around?
We needed 3 things together, and it's not or, it's and.
Yeah.
First of all, we needed to have an interest of an investor that can put the money. So we had to go back to square one and re-talk to all the investors we had. Second of all is this investor has to qualify for the bank in terms of net worth.
Okay.
So you have to redo the financing of 2 or 3 months. And third of all, you need to have the seller agreeing to extend the offer, because look,
you're bound 2 weeks from now.
So 2 weeks to just take the $250,000 deposit, and that's it. That's all. Finish.
Thank you. Goodbye.
And we're gonna relist it. So we had all 3 together, but the negotiation with the owners were quite.
I can just imagine that phone call.
Quite funny.
When you called the seller and say, "So I have a good news and a bad news."
Yes, this is what I said. I said we have to meet.
Yeah.
We have the good news and the bad news. The bad news is we lost a primary investor. The good news is we have another one. And you're technically, legally tied up with us because the date wasn't a date of rigueur.
Yeah.
So we agreed to meet. And this is when negotiation started.
And so I take it that he agreed to give you a bit of an extension?
Yes, and actually it was better for me. Okay. I won all on those. And it was really scary at the beginning because we came at their offices and they came with formal notice, mise en demeure, saying, look, you're out of delay. We're going to take the $250,000.
You have to close that date.
Bye-bye.
Yeah.
And I said, yes, but he said, no, take the time to read.
Yeah.
Read
this first, and then open your mouth.
And then, so I was like, whoopali, okay, it's going to be hard. Anyway, so I said, look, I took the paper, I put it aside. I said, you're already arguing with partners, right? Mm-hmm. You don't want to be arguing with everybody.
No.
So how can we find a solution?
No.
So I want to have just a month delay. This is what I want. Mm-hmm. But the bank has to requalify the new seller, partner.
Yeah.
you have delays, and it's out of my control. So I cannot do that. But I can promise you, by June 15, your building is going to be sold. And he said, okay, good. I want $1 million in deposit. so in my lower offices. So I was like, woohoo! Okay, so you have to put your it's not skin in the game at the time.
Yeah. And that was just $1 million deposit. If you don't close on the 15th, on June 15th, then
I'm losing that.
yeah,
money.
I keep it and you walk away. Bye-bye.
Yeah, exactly.
Oh, man. Well, that's when it's balls of steel.
I don't know, but it was motivation to close.
So then you did, and congratulations.
Thank you so much.
That you said
It was a team effort.
it's a team effort. But sometimes when we say it's a team effort, we forget how much individually we've put energy and work. I'm sure
yes.
you put a little bit more work than the contractor into this. No offense to him.
Not yet.
Yeah, not yet. Exactly.
Not yet.
But for now, you being in charge of acquisition, that's a huge milestone.
Oh, yes.
And did you celebrate a little bit?
We did a little bit, but you know how we are. We focus on the next one.
On the next one and the next one.
And you know, having a foot into that industry give us the need and the will to buy new buildings in downtown Montreal.
And to continue.
Yeah.
Yeah. What was this is your biggest transaction so far?
Yes.
Yeah.
Yes.
No wonder.
I mean, so far for the next
So
month.
far for today? The guy's checking in his watch like, well, I don't know. Maybe from at 1 o'clock I'll...
No, I'm joking.
What was... I mean, there's so many takeaways and learning experiences from this, but like now thinking back where you were 2 years ago or a year and a half when you made that first offer, where is it that you feel like you've learned the most?
I think you have to be, when you're jumping in something, you have to be a little bit scared.
Mm-hmm.
And this is where you learn, because when you're doing just the stuff that you know, at the end, you're just being lazy, and this is where you're making mistakes. So being scared about, you know, leaving your comfort zone, and you have to be more cautious. You have to ask more questions. And this is one part of the stuff that I usually say is get out of your comfort zone.
Yeah.
Because this is in that area that you learn more stuff. And so this is one key takeaway, I would say. The second one was really in terms of partners. It's not because someone has a good track record and he has good reasons. I mean, it's not bad reasons. I mean, it's stuck, right? So, but don't take anything for granted and always plan for A, B, C, D, Z plan, right? And this is another thing. And don't be, a last one maybe, don't be afraid of losing a deal. It's okay. I mean,
walking away.
Yeah. Look, at some point, it's just a risk-reward ratio, and you have to look at every deal and don't be emotional about something else. And it's not because this is the only one. This is a year before that, I left out of 65 units building in Verdun, and I really wanted to buy that building, but I was not able to for a lot of reasons. Even if we are closing 95% of the offers we are giving, we are sending. But anyway, don't be afraid. Don't be emotional saying, oh, okay, it has to be the deal. It's been so long that I'm working on this one that I have to close it. Yeah. And even if let's say, other metrics are not making sense anymore, I'm just closing my eyes and continue anyway. It's not a good way in real estate.
Don't avoid the red flags. You feel it in your gut, and you're like, but as you say, we get attached. And then we've worked on it for a few months. We put a lot of energy, and then we end up. That's when it alters our judgment. We make bad decisions.
It's better to lose 50K than 50 million.
Yeah.
So, but when you have the hand in the process, just pull it before it gets.
And I will add to that. You know, in building the team and working with good professionals and all that, sometimes the easiest way to lose 100,000 is to try to save and cut a corner and try to save $1,000.
Yes.
And so it's really a balance between the two.
Yes. You're exactly right.
Oh man, the things we have to do for real estate. Denis, thank you very much for this, for sharing this. A lot of people actually don't want to share too much about a big transaction because they're scared of what people listening might think. They're scared of the market. They're think of the possible repercussions. And I really want to thank you for actually having the
Everything is
courage
public. I mean, a lot of
to share
people
all
are-
that.
I mean, yes, but I think it's a good way, and it's not because a deal is 10 million or whatever that all the learnings cannot be uh, uh, put in on the smaller deals. Like it's not like all learnings is good learning. So anyway, it's maybe even if people are not in that kind of deal, you can still take some golden nuggets and apply it to your 3, 4, 5, 6 units.
Exactly. And we learn a lot by listening to other people's experiences.
Yeah.
This is how the podcast came about. And that's why we're going to continue, because for you, you're listening as you're running in the car, at home, or doing whatever. You will have the confidence to keep investing in real estate. It will make a big difference in your life. It made a big difference in my life. It certainly made a huge difference in Denis' life.
Of course.
And if we can do it, you can do it too. So Denis, thank you very much for your experience today.
Thank you, Axel.
Thank you very much to everybody who's listening. And as usual, research your market, make some offers, and we'll talk to you next week. Thank you.